Okay, so for you guys who are new to the foreign exchange market, 37% are showing you're actually new to the foreign exchange market. So I'm just going to lay it out in layman's terms what the foreign exchange market actually is, what it consists of, etc. So now for you guys who are new, foreign exchange, Forex. Okay, so let's pull up an example. When you go to a foreign exchange, you say you want to go on holiday to the USA, for instance. Now you can go to a change bureau and it's going to give you a rate, for instance, pound to the dollar. So let's say 1.63. Now 1.63 is just 2 decimal places. Now the foreign exchange market actually allows you through a broker to actually indulge into the 4th decimal place of a certain currency pair. Now the 4th decimal increment is actually known as the pip, and the market is in fact open 5 days a week, 24 hours a day. Closes at 10 o'clock on a Friday night, opens at 10 on a Sunday. Now, throughout we have different sessions, London, US, and then we have the Asian Tokyo session, and the prices of the currency pairs are still fluctuating. Now, we can execute trades whenever we want through a broker. Now, for you guys who, we're going to get many questions on what's a broker, where do I put my money, is it safe, etc. There are many brokers out there. Now, each and every broker have their own access to the interbank market, and that's why they can offer competitive spreads, services, and so forth. But the market itself is a quite a dominated market, a manipulated market by the banks. So 80% of it is actually controlled by 10 mega banks. Now, it isn't as, for some of you guys who've actually dabbled in the market and found it quite hard, we have these competitors, the companies and so forth, and the banks and the central banks and so on, hedge funds. The broker is the middleman to this interbank market. Now, it is very hard to beat these guys at the top, but then we have the broker in the middle also. Now, a lot of the brokers, we like to be straight up and honest with all of our students and so on. A lot of these brokers actually are working against you. Okay, so these guys don't really want you to make consistent withdrawals, etc. We do guide you into some of the brokers that we used over the years, with the fast withdrawals, low spreads, etc. Because we do think regular withdrawals in this market is a key way how to balance your psychology. We're going to get more into psychology shortly. Okay, so through this broker anyway, you have your different platforms. Again, I'm sure many of you guys have dabbled with such platforms as MetaTrader 4. Now, we've used many platforms in our time, CMC, MetaTrader 4, loads. We've been through everything. We've been through all of the indicators, all of the softwares, all of the robots, all of that crap. It's all junk. Okay, so you can place a trade through your broker, buy, sell, and you'll be instantly executed into the market. Going back to that 4th decimal increment on a currency pair, as soon as that starts fluctuating, you'll be in profit or loss. Now, you can close the trade whenever you want, and you also have full domination over how much risk you want to put on that certain trade and so forth. On the whole, as let's go back to the technicals, for you guys who are new, you might see all of our charts and think, what the hell's going on there? Well, it isn't, it doesn't seem, may seem a little bit complicated. Okay, so with all of the chart work and so on, it's just historical data of where the currency pair has been going over a certain period of time. Now, we can always check historical data and historical prices, known as support and resistance and so on, and the candlesticks, and just reading price in general to determine where the price is, the currency pair is likely to go next. Now, with that being said, with that being said, technical analysis is a form of art, and that's what we teach here. I'm going to go through 4 or 5 charts soon to give you an example of exactly how we analyze. We're going to do a fresh, clean set of currency pairs. I haven't looked at the market in a few days, been very busy. But we're going to give you a full insight into the actual charts, how everything moves, and some examples of trade setups.
So hopefully that's very simple in order to people understand what the Forex market actually is, and a little bit about how we trade it. So it's basically strategic strategies used to place trades on whether the market's going up or down.
So also just other factors behind the market and why it moves. Obviously, you have your fundamentals. Each and every day you have your macroeconomic data. Your macroeconomic data can consist high volatility, low volatility, medium volatility, such as GDP figures for the pound. Okay, so maybe a central bank will come out and speak. Maybe it might be a hawkish outlook, dovish outlook in terms of what's gone on in the past month, the past quarter, and so on, in order to keep the economy balanced, to see if you have to configure interest rates, inflation, etc. That's all going to have an impact on the market. But again, if you know how to reprice properly, you can most of the time the price will tell you first what's about to happen, and then the fundamentals might give you that extra boost in line with your technicals.
Now again, fundamentals. We have a lot of people always, come up to us saying they're fundamental traders, and we've actually, come across on their course. We say, "How are you fundamental traders?" And they've been going on FX Street. They wait for the figures to come out, green or red, and they just press buy and sell. That's not a fundamental trader, guys. That's doing extremely risky things. So for us, guys, we had the decision of trying to be a fundamental trader, but it's near enough impossible. You have to be an extreme amateur or extreme professional, and there's only a few extreme professionals we have actually come across. So if you guys are new to this market, try and stay away from just being dependent on the news, because you're going to sit there all day going through different variables, going through different decisions, trying to figure out, and you're going to be more confused than when you first started. So that's one of the reasons we became a 95% technical trader. Once you master the FX market, then possibly you could venture on to other markets which are fundamentally run, and maybe you can do research and spend a lot of your time then going into those markets. But for us, Forex is the foundation you need to get into. You can come up with all your different strategy when it comes to technical analysis, and that can pay off again and again.
Yeah, and also, guys, many of you guys are struggling. We've received so many emails here and there, and we also receive a lot of emails who's watched our videos and actually made some money, whether it be demo, whether it be real, or just learn something in general. Now, a lot of people used to struggle and are struggling, okay? And another reason why we actually got into teaching on ourselves, because we are quite young, I say 23, 25, and we've seen the younger generation now being introduced into the Forex market. Now, a lot of the younger generation are waking up to what's going on out here in terms of university, the fees, all of that crap. Sorry if you're at university, it's just my outlook
Sean's
on this.
opinion.
Okay, yeah. And people are being deceived out here, so we want to give the younger generation a chance to get into this. We've been in the game 4 or 5 years now, and we're just coming out with truth. We do not say this is an easy game. You cannot ever put a figure on how much you can earn in this market on a day. You can never market it as okay, £200 to £500 a day. Nothing is ever guaranteed. A professional trader understands it's all about the pip count and most importantly the quality of your trading setup. Now, with that being said, I'm going to go through some of the student journals shortly. I'm going to go through some of that and journaling your trades, finding quality setups, repeating it time and time again so it's programmed in your mind. Okay, and then the money comes naturally afterwards. With that being said, again, why many people are struggling and why we used to struggle back in the day is because we used to wake up, we used to jump on Skype to each other 6 a.m. thinking, okay, the more time I spend at this computer today, the more money I'm going to make.
That's right. A lot of people think you need to be a Forex trader. You've got to spend 10, 11 hours in front of a computer every single day. What they don't realize is, unless you actually spend that time wisely, it's actually going to hold you back. Me and Sean should do it time and time again. We'll wake up, we'll make our certain, take profit by 9 a.m., GMT. But however, we wouldn't know when to stop. We'll continue to trade, and we'll end up actually losing our day's profits. Yeah, that's what scalping is. Scalping is another big topic which a lot of people want us to talk about. Now, scalping is, again, you're either an extreme professional or you're an extreme amateur.
Especially psychologically.
That's not what we're about at Astro FX.
Yeah. Scalping, again, me and Nat used to sit there on the computer. We'll make 20 pips in the morning. We never really had a target. Now, the way we trade now, as Nat just mentioned, 10 to 11 different strategies. Now, you see so much. We bought so many MetaTrader 4 systems, robots, indicators, all of this.
So many.
Okay. Now, there is no one mechanical strategy you can use in the market time and time again. As I say, the market is controlled 80% by the big guys. Now, do you not think they know what's in the textbooks, how human psychology works, how to manipulate around the news, even though your broker may take advantage also? And, we even bought a set of indicators where a little arrow would appear on a screen. Sell, buy, sell, buy. If it was that easy, I would be in like Barbados somewhere right now. Okay. So the reason why these mechanical strategies and systems do not work is because the market is dynamic. It's a very diverse market and it will shift time and time again. It knows people are going to catch up. Okay, you may have a system with your MACDs, your stochastics all lining up together for 2 weeks. The next 6 weeks you'll get absolutely destroyed. Okay, so the strategies that we go into 11, 12, there's an actual strategy to that strategy, if you know what I mean. Okay, so it's the market's all about putting these strategies together like a web, and there's so many different dots that need to be connected, which we learned through most of our mistakes, which we'll go into shortly. But as I say, the strategies we teach, it's all price action, it's all keeping ahead of the market. And going back to scalping, you can scalp here and there, but the way trading should be relaxed. Again, as Nat mentioned earlier, always being in front of a computer defies the whole object of trading, because trading is all about freedom. Now, if you wanted to sit there all day and burn your eyes out, stress out, and so forth, you may as well go get a job as a receptionist. And we realised that after so long of waiting out live, so many losses, and we cultivated our other strategy, which is more long term, bringing data from the higher time frames to the bottom, and going with the overall momentum using Fibonacci, price action candlesticks, etc. We don't need any indicators whatsoever. We sometimes use a moving average to filter out some of the noise. But with that being said, I'll show you on the charts shortly. But the way we trade now is very relaxed, couple trades a week, and we just let it breathe, let it run.
So hopefully that helped for all you guys that don't know what FX is, and just some common misconceptions that people actually get involved with. Now, what we're about to go to in a minute is why you guys are all here, the technical analysis part of today's webinar. This is our first webinar, so do bear with us. We might blabber on about the wrong subjects, or we might miss some things out, but I promise by the end of it, we're going to go through everything.
Okay, so just for you guys again who are actually new to all of these charts, okay, if it looks quite complicated, these are in fact, I'm currently on a 60-minute time frame. Now, these are called candlesticks. Now, let me just give you a simple bar. Now, a simple bar looks like this. Now, let's just zoom in. I hate bars, very, very ugly. Okay, so over here we have this bar opened, this bar closed, sorry, this bar opened, it dropped all the way down, it's left the pin where the price previously was, it's whipped back up a little bit higher, and it's closed. Okay, so this bar is in fact red because it's closed lower than actually opened. Now, this bar's closed now, and the next one has opened, it's dipped down, dipped up, and as you can see, it's green for bullish because it's closed just a few pips higher than the opening price. And then the next bar after that, boom, we had a little bit of volatility here. We've opened, we've shot all the way up, spiked a little bit at the high, pulled back from the high in that specific 60-minute time frame, and then boom, we've opened to the next one. So again, guys, what we can simply do, we can also take the line chart. If you guys were new to charting, we like to keep it real simple. We'll basically look at the candlestick, which I'll get into a moment, and just the line. Now, the line, as you can see, we can just drag the chart backwards. On this axis here, we have the date and time, and then we have the price along the right-hand side. Now, as you can see, the EURUSD on this 60-minute time frame, quite noisy, quite choppy. The lower you go in terms of time frames, the more choppy and noisy it actually gets. So we like to keep all of our analysis maybe on the monthly, weekly, daily. We'll get the overall momentum / bias, and then we'll go to the 4-hour, 2-hour, 1-hour to find a setup chart. And we don't really draw, see these lines here, the support and resistance line, which I'll get into in a moment. We don't really like to draw these on anything less than an hourly chart because a lot of the price action below the hourly chart it can be due to a lot of fundamentals, spikes, just market noise and just a lot of choppy behavior really, which isn't really, the guys with the money, a lot of guys with the money, the swing traders, the £1 million accounts, £2 million accounts, a lot of these guys are just looking at the monthly, weekly, daily. Now, the problem with some of the scalping, etc., which we used to fail with, is we never really looked at these bigger time frames, which we'll get to in a moment. So, for instance, if we've seen a reversal on the monthly or a key level being hit on the monthly and the price can't go any higher, and it looks like a sell, but we're only focusing on the 15-minute, 30-minute charts, and it looks like a great buy off one of these imaginary support levels, with no regard for what's going on up here. The wave can just go. So again, guys, we have to think like one of the big guys, one of the market makers, etc., in order to be successful in this game. That's just one of the points. Now let's go back to EURUSD. So for you guys who have some experience, want to know my analysis on EURUSD, we've been posting charts on this for a while now. Okay, so as you can see, we are stuck in this range, mid-range, bottom range. This is in fact here 1.2360, the low of the year. Okay, and as I said, I am just waiting for this counter trend line break to go south at the moment, and target one is boom, 1.2460 and then 1.2360. Now let me just go up a time frame. Okay, let me just go to the daily chart. Now, EURUSD, we did in fact put in this double top, and I remember watching this. We put in this double top just here. This spike through the double top, again, just basics of price action. The market will make higher lows, higher lows, higher lows, and higher highs, etc. It did in fact put in a higher high. Candlestick reversal, I'm not going to go into too much detail, but this is a candlestick reversal, bearish candlestick reversal, and we can tell by the spikes, the price action, etc., what the market is likely to do. Now, nothing's 100%. However, what you can do to be successful in this game is focus on the exit strategy rather than the entry strategy. So what I like to do, I always look at the market. I'm going to do it in a moment for you on this chart and see where potentially the market could go. Once we've got a few confluences from where for where the market can potentially land, then the entry strategy becomes very, very easy. You know, just certain trend lines, MA crossovers, etc. So on this EURUSD, we could actually take, let's go to the weekly chart. Okay, so we were bullish for 2 years. Now we had 0.1, 0.2 of this trend line. We had the double top here on the weekly. Again, as we go up time frame, it's going to be a little bit more dense. There's going to be less candles and so on. So we actually had a break of this trend line around here. Okay, so once we broke that trend line, there's certain rules for the trend line bounce, certain rules for a trend line break, and so on. Again, each strategy has its own rule. It's all about connecting the dots. Now EURUSD, let me just remove all of the lines. Right, put this one back on. EURUSD on the whole. Okay, so on the trend line break, we're always going to look for 0.2 as target 1. And then the overall target for a trend line break is in fact 0.1, which is here. And as you can see, guys, the price action that we actually came all the way through. We through this support, we retested that support as resistance, spike, spike. The spike indicates price rejection from that level. The market stomped it back down. 1, 2, and now we're just floating mid-range. Now, many people have been trying to pick the bottom in the euro. Okay, the reason I say that's a bad idea is because we're now under target 1, and it's now resistance. Unless we break back above that resistance, we might come back and make a new high. We may even just, you know, come up here or something. All we have to do is zoom out, look at the historical levels of support and resistance. But until my target 2 is hit, because I know the strategy of this simple line, until this level is hit, 1.2050, I will not be looking to buy this currency pair at all. If you do want to buy and don't want to sell, however, just wait until it comes to that level. Now, with that being said, this confluence at 1.2050, if we go to the monthly on the bigger time frame, once again, you can easily see we don't need no indicators for this. We don't need anything. We can see confluence of support, 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 prior resistance, support, support. Now, a lot of people think support and resistance is just one price point. However, it can be a dynamic area. That's why sometimes I use the Ichimoku cloud and so on. But as I say, great support zone there on the EURUSD. So my analysis and overall, as you can see, simply lower swing high, lower swing high, lower swing high. And now potentially we'll bottom out around 1.2. And for you guys who don't know, the USD Swiss franc also has correlation with the euro. Okay, so euro goes down, this goes up. We're putting in a potential flag pattern here now. Okay, consolidation. And what we did, we can take the last leg, add it onto the breakout. Simply put a line here, look at the daily, weekly, sorry, and then see, as you can see there, that flag comes in alignment with some historical major key levels of resistance, which will work hand in hand with the euro to push that down. So that's my euro analysis for now, nice and simple. So,
hey guys, I'm actually looking after the Instagram. Right now, a lot of questions about, you know, what strategy are you guys going to show, and Forex is not about one particular strategy. I have to stress, I was going to cut Sean off, and we get this question time and time again. Can you guys teach me the Forex strategy, the Astro FX strategy? What we actually do is teach, you know, nearly close to 10 strategies, and you know, there's other strategies out there in the world, but it's about turning them into confluences. So what Sean is showing right now is confluences. It's not just, all right, this one strategy is telling me this, and this is the reason for me to enter. Forex is a game of probability. So you collect all the different strategies you've got to make sure they're all telling you the same thing, same direction, entry, exit, everything. Once you've got them all together, then it's up to you as a trader to actually connect all the confluences and see, is this a high probability trade? Is this trade worth it on a risk to management basis? So yeah, I hate to cut Sean off there, but again, you know, we've got a lot of questions going on right now. We've got a lot of emails through. I mean, I'm managing it on my laptop over there, and a lot of questions about strategies. What strategy is this? Again, guys, it's not one strategy in the FX market. One strategy is not going to make you profitable. It's about being a trader and being the whole package, really.
Yes, guys, correct. So I hope that was some help to everybody out there. Okay, so the next pair I'm going to go for is GBPUSD, because that's our second favorite pair in the poll. Now, GBPUSD, let me just go over to that. I do want to say a few things about this. Okay, just give me one moment. Now, GBPUSD, I just want to pull this chart up for you here. I explained why the GBPUSD actually rocketed from its yearly highs, etc. But as you can see now, this analysis was actually done with one of our students. I'm not sure if he's in the room right now. But GBPUSD, this is how price and key levels can tell you everything about the future in the currency market. Again, many people think that the currency market on the whole is dominated by fundamentals and what's going on in politicians' office and so on. But however, the collective consciousness of all of these traders seeing certain levels, watching certain candlestick formations, etc. play out, actually causes a lot of the movement in the market. Now, as you can see, this analysis was done when the GBP was trading at 1.7043. Okay, we had, before, I'll get to a clean chart in a moment just to show you this, we had a double bottom 2013 summer of 2013, and we rallied up. As you can see here, we had a higher low, higher low, higher low, higher low, higher low, and so on. So with that being said, there was some nice Fibonacci moves within this weekly uptrend, actually, which we caught quite a few of them. Now, on the bigger picture, that was making higher lows. Now, overall, you should not be selling against a bullish market. But again, guys, those who are focusing on just small time frames, scalping, and these little Mickey Mouse indicator systems, without recognizing this simple yet most overlooked basic of the foreign exchange market, maybe trying to sell, and you're just getting wiped out. Like, why? Because you haven't looked at the bigger picture. Now, yearly highs, we had a hanging man formation around here. We had 1.72 major resistance, which was monthly. That level, 1.72, is actually the pound crash 2008 went through that level, and it's been trading below that level ever since. So it's come back up, give it a little kiss, and then it's ready to roll. However, if we did break that level, we would have been going up around 900 pips. I can't remember off the top of my head. So yeah, we had a straight reversal off that. Again, we had bearish divergence. This indicator just measures momentum and so forth. You know, we can see the lower highs on this, and the momentum just slowing down. And the overall target for this was 1.6300. Again, you can see the trend line here, 1.6300. Now, I did this back in July. Okay, so let's just go to the pound chart now. At the moment, let me just start off small on the 60-minute time frame, because I have in fact been posting about the pound recently. Okay, so yearly lows, 1.5 that level, probably 85% accurate. That 85% confident that it will go to that level. So again, as you can see, people want to try and buy GBPUSD. I'm not even going to put the moving averages on here, but as you can see, lower highs, lower high, breakout, new lows, etc. Pounds on its last legs. Everyone thought the dollar was going to die, etc. And this is where I'm going to go over gold soon and talk about some of the correlations between the dollar and gold, etc. So I'll just say that till now. Okay, so if we do break that level, as I say, 1.49, and where have I got that level from? Is simply this double bottom. It's kind of a dynamic area of support here. Okay, guys, so as you can see, it took a whole year for the pound to build up this nice and steady uptrend, and 4 or 5 months to crush the whole thing completely. And as you can see, it's just like body after dagger. So, guys, I don't recommend you buy the GBPUSD just yet. So that's my analysis on the GBPUSD for everybody out there. That's it. That's right, guys. You know, we do give our technical recommendations, and there's people messaging us, email us, what about this, what about that. Now, we do not endorse signals whatsoever. Can I need a charger? One sec, guys. Max go in a bit low. Okay, so we do not endorse signals whatsoever, because if you're a signal providers, leave bodies behind, and that's the truth.
Okay, you know what, signals, this is a good subject. This is a great subject. The amount of messages I get about signals. Damn! Okay, now let's clear up signals in less than 2 minutes. Me and Sean, we used to do our own signal service.
Tell them out before that.
What?
We used to pay.
Alright, first of all, we used to pay for signals. This is the honest truth. We used to pay for signals. We paid for people all around the world. We used to see them get 1 or 2 trades right sitting on Facebook, you know, from all the way across the world. We didn't know how much money they had to their name. We didn't even know if they were profitable. We just paid them. So, you know, we went from unsuccessful signals to unsuccessful signals, and then we wanted our own. So we thought, Let's open our own signal service. Let's give it a shot because we know that we're profitable and we know we can help people. So about three and a half years ago, we opened our own signal service. What was it called?
Easy FX.
We called it Easy FX.
But we actually renamed it Easy SL for all the stop losses that got hit.
You guys can actually go on Facebook or something and type in Easy FX. It's out there somewhere. With our own signal service, we charged £100 a month. Within the first 10 days, we had over 65 people joining. And I'm sure a lot of you thinking, that's a lot of good money, that's a good following. And it was. And we traded, for a nice 3-4 weeks. I think we had 3 great profitable weeks. Everyone loved us. Everyone wanted to be our best friend. And then we had 1 losing week. A losing week is going to happen in the FX market. It might be 3-4 days where you just lose a trade and you know that you're on a bit of a losing streak or the market isn't right. We might be down about 6-7% of our accounts. We used to get messages of people, saying you've blown my account. You're 75% down on my account. You guys owe me some money. Messages left, right, and center. And this is when we learned a core lesson in the FX market.
Yeah.
You cannot copy a trade after trade. Now let me explain a bit this into further. If me and Sean, we did a signal service, on one day we might have, a bit of organization. So we might say, right guys, no more than 2 trades a day. So we might lose those 2 trades a day when we're doing a signal service, or any of the signal provider might lose those 2 trades in one day. Now that person, if they're a skilled trader, they might know they can enter an aggressive trade and get all their money back, get all their pips back. But they cannot share that trade with everyone. You can't show your aggression when it comes to trades. You can't show your aggression when it comes to risk management. You can't let someone copy your trades. They need to know your psychology. They need to know the amount of money you have in your account to show how much you can leverage it. There's so many different things that come when trying to copy someone as a trader.
Yeah.
Trading is not a team sport. For every single person that believes in signals, guys, principal thing. If there's one signal provider out there, just one signal provider out there that worked, everyone would be profitable off it. Everyone would be profitable off it. And there's no one out there. So next time, guys, you think about signals, just think, you gotta catch your own fish. Stop letting people just, try and trick into signals, telling you that they're gonna give you 3 trades to your phone, to your email, whatever. It doesn't work like that. Stay away from signals. Become your own success story.
Rest in peace, signals.
We were driving around Birmingham. There's a place called Brindley Place, if anyone's heard of it. We parked up and we actually had someone just notice the car, and obviously everyone's seen the blue Maserati with the number plate Forex on it. We actually had someone give us their phone, and they're actually trading. Was it cotton? They were trading cotton. Cotton. How trading cotton? I couldn't believe it.
Without mastering FX first. There's nothing wrong with trading cotton, but we do say FX is technically pure market. Master that, then move on to other markets. Not just head straight first into cotton.
And the simple thing is, if we had to ask them, okay, do you guys know anything about cotton?
Where cotton comes from?
Anything about cotton, they wouldn't know the answer. So guys, do your research and become a master of one thing. Don't think you need to conquer 10 things at once, because you'll actually just end up being more confused than when you first started. So true story there for everyone that tries to trade way too much.
Yes,
I'll pass it back to Sean to trade one of our favourite Aussie dollar pairs. Yeah. It loves us and we love it.
Okay, Aussie dollar. Now, Aussie dollar, I've been saying 0.8400 for a while now, and I've seen many other people saying that. I'm not sure if they actually analysed it and actually got that figure, but I'm going to run over it. Okay, so Aussie dollar at the moment, okay, so we've hit the yearly lows at 1.854E-ish. Now, Aussie dollar is one of them currency pairs which really, really loves psychological barriers, especially the 0.8000, 0.808, 0.8500, for instance. The 50s and the zeros, Aussie dollar really likes that. Okay, so we've hit this level, yearly lows, and we've pulled back very, very, it's just a choppy correction. We could put fib on here from, 1 second. 1 minute. A, B, C, D, reversal, etc. Now, Aussie dollar, nice downfall. Okay, we need to take out this level at 0.8500 in order to hit the 0.8400. Okay, let me just point out one more thing. Okay, so when we analysed the GBPUSD, we did in fact just spot out that running double top formation. Now, on Aussie dollar, I'm going to have to zoom out a little bit, guys. I'm sorry. On Aussie dollar, I can pull charts up where I actually predicted all of this move here and so on, but it's a bit long to go through the charts. So this is a running double top, exactly what GBPUSD is putting in right now. Let me just remove this just for, okay, double top. We have this range here. Now, what we can simply do, price action, market moves in legs. we can copy and move drawing. Okay, bang. And again, double top formation, neckline, have a break of the neckline, we're likely to come down to TP2, which is just here. Again, that's lining up near enough to 0.8400. Now I'm going to just show you what confluences of an exit actually mean. Now we did in fact whip back, okay, but as you can see the market's pulled back down, and now we are retesting that support as resistance here. Now barriers again, guys, just think of it, you got to think, align your thoughts with the market and think, okay, just in terms of digits. Now this digit has been broken, and now that digit acts as a barrier. The digit is now acting as a barrier on Aussie dollar, and now we are likely to plummet back down. Okay, next down there. Again, guys, all about confluences. Again, the exits, the entry's so easy. Channel. Whoa. Yeah, channel, as you can see. The specific ways how to draw channels and trend lines also. I've seen people put channels up there and trend lines where they're cutting through half a Wembley and so on, but there's certain rules. Again, this is what we teach on the course. Nice and smooth, nice and relaxed. And as you can see, we have confluence there. We have 3 major confluences for an exit on there. So Aussie short all day long. If we do break that, Fibonacci 2, put a line there, zoom back out, major confluence with historical levels just here. So that's my Aussie dollar analysis.
Everyone. And another question we always get asked is, how's the Astrofx students doing? You know, which one are richer, which one are millionaires yet? We get these kind of stupid questions all the time.
Yeah.
Okay, let's put it straight. There's no one that can promise you anything in the market. Let's make that very clear. No one can guarantee you after doing any course or any education you are going to be a profitable trader. Anyone that comes on our course, we are very, very honest about the brutal reality of the Forex market. We could teach 10 traders, and there could be a chance all 10 of them don't make it, or there could be a chance all 10 of them do make it. And if all 10 of them do make it, each one of them is going to be a different trader. Each one of them is going to have their own style.
Yeah.
So because of this, everyone is going to have a different way they trade and a different form to their profitability. We do not make any claims that, you know, you can come in this business with £1,000 account and manage to make 100% every single week, which we know a lot of other courses actually do promote. For us, it's just saying this is an investment in yourself. You know, yourself in 3 months' time and 6 months' time might thank yourself for making this decision. But yeah, so that's how students go along. I know Sean's going to quickly share his screen.
Yeah.
Because again, people say, okay, what about their analysis? How's that getting along?
Yeah.
A lot of people come to us that are brand new to the market. And to be honest, sometimes they can be our best students. Why? Why are they our best students? Because a lot of people come to us with a lot of bad habits. You try and learn online, or you learn from the wrong source. You are going to keep thinking in your mind, this is the way that I know how to trade. And you're going to get fixed to thinking like this. And also, one thing I like to always say is, in this business, you can make money by mistake. And when you do make money by mistake, that can become a habit real easily. Which means if someone's told you a way to trade and it isn't the right way, or it's not going to work completely right, but however, it works on a trade or two. For example, you might come to the market and pull off a really risky trade. And when you do, in your mind, you're going to think, that's the way I'm going to trade from now on. And it could work. It could just absolutely destroy you for the 2 weeks after that, and you might lose every trade. But the back of your mind, you're going to think, remember that one time I made money using that way. So that's why we say that, you know, if you're going to come to the market, comes with a fresh mind. A lot of our students, we have to reprogram the way they're thinking, but all of them are doing fantastic. There's not one trader that we have taught that we are not proud of, that, you know, that doesn't come back to us and see how they're doing. And also our international students, you know, we have Skype lessons with them all the time. We've actually got 2 Skype lessons to do after this webinar to see how they've been getting along. But yeah, Sean will show you some of their charts to see exactly how they've been getting along.
Should we go for that now? Right, let's start with the UK.
This is just the way that we record all of our students.
Yeah, we keep you all in a nice little document. We don't just forget about you, by the way. Okay, so first of all, I'm just going to go through this screenshot that Aaron sent me. Shouts out to Aaron. We see you there, Aaron, doing well. See, Aaron's a little bit of a geek, aren't you, Aaron? So he's come back with this crazy. He's been doing very, 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 very well. I'm going to show you some of his screenshots and PDFs in a moment. Okay, so each and every trade, again, guys, at the start of the webinar, we did say, forget the money aspects of trading, focus on the quality of your analysis. Again, it's artwork, and focus on the money management and the risk reward. Now, as you can see, the market, he's been trading actively GBPUSD for a while, Euro, Yen, EURUSD, Yeah, that's and USDJPY.
He stuck to the pairs which we gave him, and obviously you can see the results speak for themselves.
Yeah, so he's got his position, long and short, contract sizes, pip value, again, pound per pip, day open, timed open, etc. But main thing is this column here, pips achieved. And as you can see, he even put all of this into pie charts and so on. He did, in fact, have 89%?
Yeah, 89%
success rate on his trades. And also, it shows you the risk. Again, guys, we only endorse 1 to 3% risk per trade. And we don't endorse like multiple orders and so on, 1 to 3 trades max.
I also like to add that Aaron had only done our course, I think it's probably less than about 4 months ago.
4 months ago.
About 4 months ago he did the course, and he went away, and we told him that being profitable is all up to you. It's nothing to do with us. We are here to have that relationship with you, to look at your charts, tell you what you're doing right, what you're doing wrong, what you could do better. But he went away and clearly showed dedication to his craft, and that's how he's come back with such great results.
And just to drop in now, he works full time.
True that.
He works full time.
True.
There's no excuse. And again, just to round his comments, it's completely up to you how much work you put in. So yeah, that's just a little bit of an insight into our UK student. Now let me just go to a non-UK student. Okay, 1 second. Non-UK. Okay, so with the non-UK students, again, we've been around on Facebook for a long time. We've always been. Let's go for Doug's a bit different. Let's have a look at Doug. If Doug's in the room.
This is one of our United States students.
Yeah, wow. Doug. Okay, so again, he had his own preference of charts, which worked for him, which is great. Again, nice and clean, few moving averages. Now, this is an analysis on the Aussie dollar. This was a few weeks ago now. We did expect it to come up to the fib. It didn't actually reach there. Or did it? No, it just came just below. Again, but he's got his overall... Again, it's all about envisioning the future. It's got its overall bias on the pair, etc. So let's go to the next one. GBPUSD worked out brilliant. Okay, smashed straight through that fib. Where his target 2 is there. That's what was hit last week. That again, brilliant. Straight price action. Very, very simple. This is what the hell? This is oil. This is oil. I look at oil. Oil. I think his targets have been hit there. 87. I know oil made a low of around. Yeah, both his targets were hit there on oil. Again, simple trendline strategies, lower highs, price action. Again, guys, master the craft on Forex, then you can move that over to oil, gold, commodity, whatever, silver, etc. So yeah, he's using his skills over there as well. And what's this one? This is gold. Okay, I'm going to go over gold soon, and so on. So this is what the students show us. We do Skype conversations with them, go through the work, and go through the mistakes most importantly.
Yeah, we went with us and let us know and show us your journal and say, hey guys, can you tell me what I'm doing right and what I'm doing wrong? Yeah. We can then analyze that trading and then get back to you, with honest feedback, and that's going to make you a better trader. So unfortunately, we don't sell the book by itself, but it does come part of the non-UK course. And then again, you can email contact@astrofx.com. We can send you the non-UK course, which has helped dozens and dozens all across the world. We're very, very proud of everyone's doing. So yeah, that's a question about the book. So that's one of the reasons we don't sell it by itself, because we actually want to be honest with all of our students.
Yeah.
Okay, guys, There's so many questions.
Wow.
How much can I start with the opening account? Okay, Another popular question. We recommend anyone that wants to get into trading, first of all, a right education and then a demo account. Please, guys, don't jump straight into live money. A lot of people say, if I jump straight into live money, at least I take it seriously. But also, you're not going to learn how to actually properly implement strategies. Sometimes you need to have no emotional barrier to actually backtest strategies to actually see if they work for you or not. And then maybe a bigger account. All right, guys. I'm going to take one more question, then we have to turn it off.
And also, just for you guys who are new, let me just share my screen. Share my screen once more now.
Yep.
Okay, guys, if you can see, we also have our YouTube channel, Astro FX. Feel free to subscribe. We do put technicals on there. We've got a lot more content coming. And we had a video last week where we went in a little bit personal on losses and lows. Now, this many people can potentially relate to this video. So losses and lows is there. It's all about hanging on. Our personal journey, we lost so much money on the way. Sometimes wanted to jump out of windows, just the real truth. But something inside us kept pulling us back. And again, for the younger generation who think, oh, I shouldn't have got into this, I've lost $1,000 or so, yeah, don't get me wrong, it can be painful. But however, Forex for us as well, rather than just being a skill set in order to make money, has also been a personal journey and a journey of detachment and growth and discipline on the whole. Now, if something happens to us outside of the market, it's given us thick skin, so to speak, along the way. So again, it's been a self-development process. So yeah, guys, hit that video up, losses and lows, because losses are a part of the foreign exchange game. And again, all technical analysis is on there. Our website, www.astrofxc.com, and then we also have our Instagram as well for you guys who may be new to following us on the Twitter.
Just type it in.
1 second.
Yeah, guys, and we know a lot of people actually do follow us from Instagram. So if you haven't got the Instagram, we're gonna show you right now. Our Instagram is at Astrofx. If it ever loads on Sean's laptop.
Yeah, guys, here's the Instagram. Again, this is where we keep up with market updates, general trading information, and so on.
So again, guys, a lot of people think, it's, falling for people, what they see in people's Instagrams. Our Instagram, when it does show rewards of trading, it is for the people that, don't see light at the end of the tunnel. We want to be there to actually talk about how we were once in your shoes, that we didn't know exactly where to go, we lost money. And we're just showing you that with hard work and persistence, always persistence, it can be done in the FX market.
Yes, guys.
Let's show my camera. So yeah, that's our Instagram, that's our YouTube. Make sure you guys check that out. All right, now I'm going to leave everyone on a note.
Yeah.
All right, okay. Now this is the note. A lot of people say, okay, you guys have been trading for 6-7 years now. How long was it till you guys become successful? This is one of the craziest things that me and Sean back in the day, we always had persistence, but sometimes we didn't know how close we actually were to success.
Mm-hmm.
Me and Sean, I think we're one of the only ones in this business to actually admit, hey, you know what? We lost for 2.5 years straight.
Yeah, indeed, 2.5 years. We used to smash up phones, laptops, drink a lot of alcohol, and so on. But we always found a way to come back up, and all of our losses and previous experiences, because what we do teach on the course as well is mistakes and traps. Now, a lot of the mistakes and traps, you can have all of the technical skills and so on, but you could fall into certain mistakes, traps by the broker, psychology and all of that kind of stuff, and still be unsuccessful. So along our journey, we were dragged through the rubble, but we did pick up all of that experience on the way, which we can now relay onto our students and everybody else to give them more of a fast track at learning and being profitable in this game and mastering the skills of technical analysis.
Yeah, guys. So me and Sean, after 2.5 years of being down, feeling sorry for ourselves, not knowing if the forex market was going to pay off. Sometimes, I'm sure you guys can relate, you're angry at the person that got you into the FX market, thinking, oh, how would my life have gone if I never knew about it? But here's some words of encouragement. Me and Sean, we failed for 2.5 years straight, lost money, had so many doubters, friends, family, everyone. Everyone can be on your back saying, this is something that you're not going to be able to do something else, do something else. After 2.5 years, once me and Sean, we see it as a scale, a tipping scale. And when the scale does come your way and you actually have become a master of your craft, it took me and Sean less than 7 months to gain back what we had lost over 2.5 years.
And it was a big
It was a big amount.
A lot.
So yeah, that's just some motivation for you guys. We want you guys to, believe in yourselves. We want you guys to thank yourselves in 6 months for making certain decisions around the FX market. You guys are in the seminar because FX market is something that you're interested in. Yeah. I'm sure it's something that you guys are passionate about. So continue to go. Follow us on our Instagram. We will love some feedback about today's webinar.
Feedback will be good.
We are, guys. I say this is our first webinar. We did our first public speaking event a little over about 2 months ago. That was fantastic.
We just had a Skype message come through saying you're talking about the same things that I'm going through. Yes, the same in this market, guys. Keep your head up, and there's light always at the end of the tunnel. Believe in yourself.
That's right.
The main aspect.
See it as a business. So yeah, guys, we're gonna say sayonara to everyone. Yeah. I'm gonna open chat back up so everyone can say bye to each other. All right, guys. So we will see everyone later. And great. Okay, we'll do another webinar soon as well. A lot of people are saying, okay, there's a question that wasn't answered. Again, hit us up on our email, contact@astrofx.com. And someone goes, who owns the cars? Me and Sean actually fight over the cars. will actually race from one day. Oh yeah, we have a new car coming in January as well. We'll make sure we do a video of picking it up and everything for everyone. And okay, guys, we'll have to end the webinar here. See you guys later. Appreciate the advice. Appreciate everyone. Thank you for turning up, and God bless.
Euro up or down, bro? Stop it.
Bye.
Stop it.